Here we have the current stock market update for Palantir Technologies Incorporated, stock ticker PLTR. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So here we're taking a bit of a broader view here, intermediate term time frame, the 4-hour price chart. So each candle on this time frame represents a 4-hour trading period. And as we can see here, share prices themselves have started to make marginally new highs, coming in at $37.35. This is important because we're starting to stall out a bit at these elevated levels, and it sort of remains to be seen, how much juice there is left in this orange. How much more juice can you squeeze out of this orange? Because share prices themselves have seen a tremendous run recently, and there are real questions about how much momentum this stock has left in it. So, as things currently stand here, we are it does look like we're going to close out relatively near the highs, which is a positive bullish signal. But at the same time, as we can see, if we start to pull in a bit on the price chart, we can see that, there's a lot more red candle formation that is starting to develop at these higher levels. So, if we pull out to the indicator reading here on this time frame, currently we can see that, we're starting to roll over out of overbought territory. So this can really be viewed in two different ways here. I mean, essentially, we still really are trading in overbought territory. I mean, technically, we're below the 70 mark, which would be the classification for overbought. But we're right around 68.9 at the moment. So I mean, it's very close to being at the upper end of this range here. So for all intents and purposes, we really still are trading, right around this overbought region here. And then in addition to that, you're starting to see share prices decline enough so that the relative strength index reading is starting to roll over here and fall below its own exponential moving average, which would be this yellow line here. So, this does suggest that there is a fair amount of room now to the downside where the stock could start to extend before we started to see share prices moving into oversold territory. So, that's not necessarily to say that we're going to see a massive collapse here or anything soon, but the indicator reading itself is starting to look as though it's topping out here. And I am a bit surprised that we're not seeing a bit more profit taking here into the close of the week. We haven't exactly closed just yet. I mean, we're trading, sort of in the second half of the trading session right now. So we haven't actually seen the price close. But it will be interesting to see, sort of what trajectory we're on as share prices close today, because the Friday trading session is also the weekly closing trade. So this is actually where we're going to see the closing period for the week. So if we sort of move in here a bit, we can see in the indicator that overall the momentum readings are still positive, but we are starting to roll over out of overbought territory. And now if we did start to see share prices move into support zones here, the first level that I would be watching comes in right around 33.30. 30, we can even call this really 33.50. This is roughly where the 23.6% Fibonacci retracement currently rests. This would be the price move that extends from 21.73 to these new highs coming in at 37.35. So if we look at this red zone up here, we can see that a break below this area would send us into the orange region, which would then target the 38.2% fib retracement. But for the most part, I would really point to this 23.6% area here coming in at 33.50 as the next level to watch to the downside. This is sort of moving up here because previously we were watching this prior high coming in at 33.13. But since then, we started to see some historical support zones start to develop in this area. Really what I'm talking about here is the price low that was established during the September 11 trading session. And then, of course, we do have this red zone here, which is the 23.6% Fibonacci retracement. And now, additionally, what we have is this rising orange line here, which is quickly coming into contact with this area. That would be the 50-period exponential moving average. So we can see, a fairly strong confluence of events occurring right around this same region here. And this does suggest that it could be a strong level of support going forward. So what would be the expectation here if we were to fall back into that area? We would be losing almost, well, based on current prices, we would be looking at a roughly $1 lower in share price action, and then almost $2 below the ultimate price high at 37.35. So, if we did see a break into this area, 33.50. Initially, what we would probably expect to see would be a bit of a bounce here, some buying pressure. We're starting to see a bit of a pullback. Possibly some people in the market, at least short-term traders anyway, would be most likely to start to view this decline as a potential buying opportunity, and we could see a bit of a bounce there. However, what we have to understand here is that if we did see a break below that level, you could start to see a bit of an acceleration in the downside momentum. There's a lot of trading activity that has gone on here, up above this $35 mark. And it wouldn't really be surprising to see some profit taking in the event that we do start to see share prices actually roll over from these highs. So, if we did break below 33.50, it would be a fairly significant event. I think that this would then take pressure off of the top side. I think that overall the momentum readings in the indicators and in the share price itself would start to slow down a bit, and then you could probably be looking at a period of sideways consolidation before we would be able to see another run higher. To the downside, if we were looking at real support zones to buy into, the first area that I would be watching comes in right here, which would be roughly 31.20. The reason that I point to this area is because this is the 38.2% Fibonacci retracement. And then in addition to that, we have this 100 period exponential moving average, this purple line here, that's starting to rise quickly into that area. So if we did start to see share prices break below 33.50, maybe you see a little bit of negative momentum start to accelerate, I would then start to look at this 31.20 area as a potential area to start building positions. This doesn't necessarily mean that you want to get into full positions in that area. I do think that we're trading at somewhat elevated levels here. A lot of this has been based off of the recent news that Palantir would be included in the S&P 500. But that, the after effect of that, almost the sugar high from that, I think is starting to wear off here. And I think that this is starting to become old news that really isn't likely to continue to influence prices and push the stock in the positive direction. So here are the current levels that I'm watching, and this is the current stock market outlook for Palantir Technologies Incorporated, stock ticker PLTR. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.